What's up, everyone? Marcus here with your not so weekly tax tip. So, everybody likes getting something for free, and taxes should be no different. If you invest in securities such as municipal bonds or munis or municipal bond funds, you can generate tax free interest income. So, here is what you need to know. So, what are some advantages? Number one, you pay zero federal tax on municipal bond investment income. This makes municipal bonds more attractive than many comparable corporate bonds or even taxable investments. Let me give you an example. So, a municipal bond paying 6% to an investor, and say they're in the 24% tax bracket, is actually a better investment than a taxable bond that's paying interest at 7.9% due to the federal income tax break. Municipal bond income isn't counted for net investment income tax. So if you're subject to that 3.8% surtax, municipal bonds provide an additional tax break for you. And if the bond is issued within your state where you reside, it's also exempt from any state income tax. And so for these reasons, municipal bonds are a popular investment, especially among retirees, because they are often stable and most bonds carry relatively low risk. Now, while the benefits of municipal bonds make it an attractive option for many investors, there are potential downsides. Number one, there's what's called the AMT, or the alternative minimum tax. So if you invest in certain private activity bonds, such as bonds used to finance projects like stadiums, the income may cause AMT complications. If you don't understand that, get with a tax professional. Capital gains tax. So when you sell a municipal bond for a profit, you owe capital gains on that sale. So, for instance, if you buy a bond for $5,000 and you sell it for $6,000, then you're going to be taxed $1,000 on that gain. And then, of course, state tax possibility. If you invest in a municipal bond issued by another state, the interest income is taxable by the state where you reside. And then, of course, there's always bond risk, right? Municipal bonds, just like corporate bonds, they carry a risk of default. So it's important to understand what you are buying and the likelihood of repayment risk. And then, of course, taxes on your Social Security benefits. So remember this. Interest income from municipal bonds could make up to 85% of your Social Security benefits taxable. The taxation of Social Security benefits is based on a calculation that specifically includes tax-free municipal bond income. So what's the bottom line? So investing in municipal bonds, it can provide tax-free income, stable income, but you need to understand how the investments fit with your situation to maximize the tax savings. So that's it for your not so weekly tax tip. Until next time.